I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson. He's the editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, I'm doing good. How are you doing?
We're doing great in Vancouver. Mike, what stands out for you on Wall Street right now?
Well, it's been an interesting year. The defining characteristic of this year for the U.S. stock market has been extremely low volatility. The VIX, which measures the premium that people are paying for volatility in the options market, has been trading at the lowest range it ever has in its history. It, in fact, made the lowest closing low since 1990 one day last week. What this means is that when people are paying for volatility, it's the price movement of the market that they're expecting. And usually people buy lots of puts and push these premiums up when they're scared. So on one hand, this indicates that there's absolutely no fear among the people investing in the stock market. They feel like they have no need to buy puts to protect their positions, and really they have been right now about that for quite some time. And today, as we're speaking, the S&P 500 is up 3 points, and we're up a little bit over 10% year to date. So the low volatility, though, when it comes to what the market's doing, we're seeing really small moves on any given day. As I mentioned, the S&P's up only 3 points on this day. The Dow's up 34 or so. And one thing that's going on is I think that most people have basically fallen asleep. They're not worried about the market dropping, and they don't really have a need to find out what's going on any given day because there hasn't been anything scary happening. And most U.S. investors are kind of complacent. They own their exchange traded funds, and they're just watching their accounts go up almost every single day. And back earlier this year, Warren Buffett said that people don't need investment advisors or money managers anymore because they can just buy their ETFs and get rid of avoid the commissions. And that's kind of a popular trend in the last year, the end of a bull market. And then when the market does finally roll over and drop, people will all of a sudden kind of wake up and say, uh-oh, in order to outperform, I got to make some changes or do something. But I don't think we're on the verge of an imminent decline. In July, I was looking for a potential drop this October, November. Seasonally, that's when the declines tend to happen. And some of the indicators I follow were weakening a little bit, the internal indicators. That's how many stocks are going up relative to the market. That started to weaken a little bit, and there is a slight pullback in August, but in September, in the first half of that month, those indicators all firmed up. That made me think, well, okay, we're not really going to get a big pullback. And at this point, the earnings are going to start coming out. Yeah, sure, we can pull back to the 50-day moving average, but that doesn't amount to anything. We're talking about a 6% pullback before the end of the year, and really that's no different than the 2 that we've already seen. Like I said, in August there was one, and in the spring there's a very slight one. Last year, going into the election, there was a very slight pullback. Those kind of things don't amount to anything, and at this point, as we get closer to the end of the year, most people then have an incentive not to sell and wait till next year to delay their taxes. So I kind of think with the broad market, that's where we're at. We probably will, see slight pause, pull back something, but I won't expect to amount to anything. And it probably won't be to the first quarter next year that we'll see more meaningful start of a correction or something. But, I'm just watching the market now, every week or two to see if my, internal indicators change, and they're not. So I have no reason at this point to get overly bearish in the market. That said, it is sort of a tough market for people to trade and make money. And make one point is what's interesting is what is going up. What are the stocks that are leading the market on these rallies? And I did a scan over the weekend and found a pattern that's kind of interesting. If you turn on CNBC, a lot of times you hear people talk about momentum stocks. And these are stocks that would make a new 52-week high and then just go up and up and up. And that's actually not what's leading on the rallies. What's actually leading are stocks that lag for a little while, hit their moving average and pause, and then just go straight up and just take right off. So the Russell 2000 is an example of an ETF that did this. It was lagging the market for months, and then in August sat there and just exploded. So it's actually gone up faster than the other averages. The Dow Transportation Average did the same thing. A lot of the airliners did this. Actually, Delta is an example. It went from about $45 around Labor Day, and now it's trading at $53. And it didn't make a new 52-week high. It just was weak in June, July, August, then went straight back up to its previous high. And that's kind of what I'm seeing. I'm not seeing like these lots of sectors breaking out and just going up and up and up with as the market ETFs are doing, but instead just groups of stocks that just have these big rebounds all of a sudden. There are some exceptions, of course. Google, for example, made a new 52-week high today. Caterpillar, and there's a couple Dow stocks. Caterpillar made a new high today. But if you look through the Dow stocks, about 20 of them are way off their highs, and a couple of them are like making highs all the time. So it's just a few stocks that are true momentum plays in the understanding that of making new highs and going higher and higher and higher and higher. So that's why there's so much focus on playing just these couple stocks, because trying to guess the ones that are going to rebound is a very difficult.
Well, Delta is showing a little feistiness as well. It just announced today it won't pay the 225% tariff on Bombardier aircraft it just bought.
Well, that's interesting, and that's kind of like a. Well, what are we gonna? What's the United States gonna do about that? I don't know. It just sounds like a legal mess created by the Trump administration, because it was just 2 or 3 weeks ago they got involved in slapping tariffs on that against Canada and Great Britain, and then what happens? The retaliation.
Yeah, well, those Bombardier aircraft, the Series C. The fuselage is made in Quebec, the wings are made in the UK, and the engines are made in the US. So basically, you're slapping a 225% tariff on American-made jet engines.
Oh, wow.
Yeah, I mean, that's how things work in North America. On average, something crosses the Canadian-US border 7 times before it's sold. Because, the screws come from Canada, the nuts and bolts come from the US, the widgets are made in Mexico, and somehow we mix them all together and come up with an affordable product.
Yeah, that makes a lot of sense. So it's just it's just kind of like a little bit of chaos, because it's like these governments slapping tariffs on each other. I mean, Boeing, it has benefited. The stock is one of those ones in the Dow trading at a new high today. It may be the top gainer in the Dow. It was around 150 at the beginning of the year. Now it's 260. So, and it's a defense contractor too, which they're benefiting from government spending.
Well, Prime Minister Justin Trudeau said to Boeing, "Really, you're suing Canada at a time that we're looking to buy new jet fighters?" Canada was looking at Boeing Super Hornets, but lots of people make jet fighters around this planet. We don't have to buy Boeing,
No, and some of these jets, like that F-22, is kind of a piece of crap. So it's just so highly expensive.
Yes, right now the Russians and Chinese are making much better fighter planes. We'll have more with Mike Swanson right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, going back to how most U.S. investors are complacent right now, and Warren Buffett saying you don't need an advisor, just buy an ETF. The IMF has warned both investors and policymakers about being complacent. Is that a good warning?
Well, I do think it's something to heed. I mean, at the beginning of the interview, I was saying there is low volatility and the VIX is super low. That is a sentiment indicator, but the market is trading with low volatility, and I was saying I don't see any sign it's going to end, and it could continue into the end of the year. But when it does end, it will take people by shock when it happens. That's actually a concern of mine. I thought going into this fall we could see the stock market fall 10, 15% off a high, and really a correction is a healthy thing for a market. It shakes out loose hands, and when you don't have one, the longer the market trades without a correction, the more and more people get fully invested, even go on margin. So when a correction does eventually happen, they are potentially more losers, more margin calls, a more violent drop. In a way, I think we saw that in 2015. The market had no volatility until one morning you woke up on August and the Dow was down almost 1,000 points. Now, it turned around, but that was the start of a correction that went on into January, and the NASDAQ ended down over 16% from the high of July. So I think one is going to come, that maybe not this year, most probably sometime next year. I'm not sure. I can't look that far ahead using my indicators of, when it's going to happen, but it's like, think of it this way, that if you are sitting outside, a storm is going to come one day, even if the sky is sunny right now, and you can open up your computer and look at the weather radar and see when the clouds come in before they do, and know you better get back inside the house. You don't want to get struck by lightning or something like that. And that's sort of the way I feel about the stock market. It's a sunny day right now. There's no storm on the radar, but there will be one, and the IMF is correct, but the problem is people that become super complacent in the market, they literally fall asleep and don't pay attention. And when there are, the people that actually are looking for some sort of excitement out of the stock market, they're going into Bitcoin that has bigger moves up and down, or they'll try to focus on one of these select stocks like Nvidia or Google or Facebook or something that has moves up and down, because, when the Dow and S&P doesn't go up or down 4 points in a day, that's just not exciting. Or they try to gamble it up by buying calls or something to put on leverage, or there's record margin debt. So there are people that use leverage. The stock market is moving so slow, it's not exciting to people, and people are actually taking on more risks, or some people are. Margin debt is at a record, and we're at record high stock market valuations. None of that matters until there is a downturn, and then it does. But few will be ready or prepared. You can, a simple solution though is be diversified, own bonds because they'll go up whenever the stock market does have a drop, and make sure, I think, you own gold and mining stocks. I think they start a bull market last year, and we're in a long drawn out pause, something like the 2001 period following the bottom of 2000. But they trade, they don't trade with the stock market. Gold can go up when the stock market goes down, and so forth. So diversification, I think, is really the key factor to protect yourself from what the IMF is warning of, which is market volatility. There's some things that will go up as safe havens when that does hit. And the funny thing about gold is if you look at the GDX gold stock ETF, it's actually up about 10% year to date too, just as much or roughly similar to the gain in the stock market.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Mike Swanson. Mike, among the safe havens, would utilities be among those?
Well, let me pull one up real quick. The utility sector, it's not in the situation it was in 2000. In 2000, utilities actually made a giant bottom after having been in a bear market for a couple of years. They did very well during that bear market of 2000, 2002. Now they've kind of gone up with the stock market. However, I do think they can benefit initially when there is some sort of correction or stock market decline, because I would expect bonds to rally, which would mean interest rates would go down a little bit, which would help utilities. So I do think they are worth, people want to own them. There's nothing wrong with doing that. Definitely.
Are there stock markets outside the U.S. and Canada that you're watching?
Well, that's a funny thing, is that is actually the stock markets outside the United States and Canada as a whole have been doing better, particularly the European markets. There's an ETF, for instance, GWL, which tracks the largest stocks outside the United States, and it's actually outperforming the U.S. stock market. The ETF for Austria today just made a new 52-week high. It's breaking out, and it's up about over 40% year to date. And a lot of the European markets have similar gains to that. So the Asian markets are lagging, although Japan is now at a new high. But China isn't doing that good this year. But the European markets are doing better. As a long-term investment, though, it's kind of funny, but I'm interested in investing at some point in the market in Vietnam, because it has a low valuation compared to other global markets. The Russian stock market still has a fairly low valuation too. Another market that is interesting is the Saudi Arabia stock market. There's an ETF for that. What's the ticker for that? But I'll tell you in a second. But the interesting thing about Saudi Arabia potentially is that they're expecting to IPO Aramco next year. KSA is the ETF for that, and it's still a developing market, and it's not in the broad-based MSCI index, and it's expected to be put into that in about 2 years, which should cause buying ahead of that happening. So that's a trade I think is kind of interesting, and it's not going up like all these other markets are. The Saudi market is actually almost even year to date. The oil market has been, sideways up and down. So that's probably what's hurting it. So if we do get a stock market correction, And I do think we will again before our lifetime or probably next year. These are markets I'd be potentially looking to buy, but I personally wait for markets to pull back before I take, generally speaking, investment positions. So the next thing I am looking to invest in is agriculture commodities, because they are in a pullback right now. They've never quite yet gone into a bull market, so I think they're in the same position gold was 2 years ago.
Mike, thank you so much for talking with us.
Yeah, thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you need to contact Mike, you can email him by punching in wallstreetwindow@gmail.com. You're listening to HowStreet.com radio. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.